Hello everyone, welcome back to our weekly market update video featuring by Marketsall and Rationale. Before starting, please take a quick moment and hit the subscribe button to support us for more content like this. There are, for this week, three major events shaping market pricings right now, and they're all worth paying attention to. First, we've got the growing pressure from excess supply in long-term debt markets, in the bond markets. There's a huge excess supply on the long end of the yield curve. Second, this public clash between Donald Trump and Elon Musk is stirring up headlines and raising questions about a policy risks around the electrical vehicle side. Plus, it creates some uncertainty if Doge side will continue with Elon Musk or not. So that's another uncertainty. And third one is fresh data like last Friday's non-farm payroll is keeping everyone on edge about what the Fed might do next. So I'll try to break it all down in this video. If you just I'm repeating, if you like whatever you see in these videos, please like and subscribe and a comment if you have any question, just to support us. So first of all, I would like to start with the long-term debt side. As you can see in this chart, I'll try to show you here. You can see that this is charts of 30 years yields of each country. As you can see, it's all there's increasing momentum. All charts are increasing. So I'll try to touch country by country in while explaining it. So we usually do not pay much attention to government bonds auctions, but actually they are held in every week. For example, on Monday there are 2 years auctions, Tuesday 7 years US auctions and stuff. We don't pay too much attention as long as we don't see any outlier result. So they're a pretty routine. But Japan's 20 years bond auction last month was a rare exception, though. It flopped hard, and that shook up the market a bit. Yield spiked, prices dropped. Not something that you see every day. That's why it's got some attention. And the US had its own 20-year auction the next day, and the investors were were paying attention there. It's apparently we're starting to see some cracks in a long-term bond demand globally. That's the issue, as you can see in this chart. So what's happening here is that governments are issuing more long-term debt than investors want to buy. That's the issue. Classic a supply and demand imbalance. That's a pushing yields up in places like US, UK, and Japan. And it's not just about supply. Traditional buyers like pension funds or insurers are stepping back, which is leaving a demand gap at a time when central banks are also unloading bonds they bought during the crisis eras, a COVID era. So they're not, I say, when the central banks are not buyer, the market needs to compensate that their space, right? But that's not happening right now. They're also this lack of demand starting to be an issue for a lot of governments. The cost of when the yields go up with this lack of demand, the cost of paying interest rates on newer debt is now higher than what they spend on big departments like defense or education. That's a major shift. So apparently for the US also, the government debt is around $32 trillion or something. And there's also a bigger risk now when investors push back like they did during for example, UK's situation in 2022 mini budget crisis, or the like a recent debate, it creates volatility and real political consequences. The bond market is flexing its like muscles more than ever. So the term bond vigilance, this is I think this term is coming from Eddie Ardani, as far as I remember, is making a comeback. Investors demanding fiscal discipline, that's the issue. And with the current uncertainty, especially arising from Trump's administration, we're kind of far away from there. And globally, they're like starting to unite all countries. In the US, for example, 30-year yields have been pushing toward 5%. I'll come up to that specific chart in the chart section of this video. Just like a new tax and spend bill that could add another 2 trillion to debt. That $32 trillion was the main debt right now, and the new this tax and spend bill, if it passes, it's gonna add two more trillion dollars. And when you look at like big names, for example, Jamie Dimon is warning about potential cracks in treasury market. Larry Fink, BlackRock, and Ken Griffin from Stadell calling out deficit is unsustainable. Even Elon Musk is creating issue about this, and that was the major event risk of the previous week. That's the issue. Japan is maybe the most interesting among those. Their long-term yields have exploded higher. It's breaking away from ultra low regime of low interest rates to they had for years. And the 30-year JGB is now around 3%. Now some governments are trying to shift more toward issuing short-term debt as a solution to rather than issuing long-term. Maybe they're hoping to find some clients for their short-term issuance, but that comes with its own risk, especially around refinancing. And just remember that long end of the yield curve is mainly related with uncertainty, term premium, or inflation expectation. But on the short end of the yield curve is more related to rate decision of central banks. So I'm not sure that would be compensation for that. But if you're following our videos, I've discussed this, that that would be the biggest issue for potential tax cut plan of a Republican government, because if they do these tax cuts, they will need to compensate this amount of money from somewhere. And what will be the compensation source? Trump's was claiming that it will be compensated through tariffs, but also I think it will put much more debt burden to government. That's the current environment right now. So what we got is a situation where supply of these bonds are rising, demand weakening, and the that's the big deal. Central banks also have a role to play, though. Some Bank of England might consider, for example, slowing down their bond sales. It's kind of rather than doing QE, it's a quantitative tightening. But we'll see what's going to happen. But amid all these discussions on yields, when I check US 30 yields, spread between US 30 yields and US 2-year yields, we're at levels that the market had seen before, and plus technically it's just within a range right now, which has not broken out yet. I'll show you a little bit later. That's why I'm just still watching. I don't think that it's in a situation that we need to act accordingly. And so let me skip to the next topic now. The one big beautiful bill that within the Republican agenda, this tax cut, it is named a big beautiful bill by Donald Trump. The political tension between Trump and Elon Musk just hit a boiling point. What started as a policy disagreement over a new federal spending bill that I had just mentioned in the previous slide escalated into personal and public issue. So The like Elon Musk actually called Trump's massive this spending package as a disgusting abomination, saying it adds trillions to US deficits. That's the issue. He urged his followers to call your senator, like congressman, and kill the bill by referring this new bill, calling also calling out this electrical vehicle tax credit rollback while oil and gas subsidies remain untouched. Then this happened on last Thursday. Then Trump's fired back. Trump said he's very disappointed with Elon and claimed Musk is only upset because this electrical vehicle tax breaks were taken out of the bill. That was for his advantage, but so they didn't put into the bill. So that's why Elon got mad. But that's what he claimed. So and then he threatened Musk's companies with serious consequences, like including cutting federal electrical vehicle subsidies and government contracts like SpaceX and Starlink contracts with government. Then the tension increased. Musk responded on X platform by calling Trump ingrateful and claimed Trump is in the Epstein files, and claimed that drew intense attention after that before being deleted. And he also just suggested to create a new political party to represent just the middle America. So it was crazy. Just as a result of that, we saw that Tesla stock dropped around 15%, and this also we saw that S&P index all US equities dropped. That was crazy. Seeing such thing in front of a public. So this public a showdown marks a definitive, seems like an end to the Trump-Musk partnership, let's say. This Elon Musk's harsh criticism on Trump's a deficit spending bill triggered the threats targeting his business interests. We'll see what's going to happen, but seems like on Friday the market bounced back, and seems like this was a more doesn't seem like a permanent issue, but we'll see if they're going to continue to work together. And the next topic that I want to come up is the economic calendar about last week. First of all, we received ISM service data for May, which came in below 50 level, which a signaling contraction for the first time since June 2024. However, this doesn't point into a sharp slowdown. Rather than that, it reflects a sense of uncertainty among survey participants. The 3-month average still stands at a 50.8 levels. So remember that in these kind of data, the 3 months or 2 month rolling data is also pretty important in order to see the trend, right? Which this indicates mild expansion though, but it's still 2 points lower than the 52.8 average seen over the previous 9 months. So we can say that, okay, we see some decline in the economic activity. I mean, but it's not it's not that critical level. Then we received the highlight of the week was the non-farm payroll data, which came, as you can see here, 139k level, which is a little bit lower than the previous and a little bit higher than the forecast number. But I think the important part of this data, the revision made to the previous data. As you can see, the announced data was 177k, but they revised it to 147k. So as you can see that, okay, there's some decline in economic activity, and amid all these also while inflation seems like not an issue, at least data do not suggest such thing. I really don't know why the Fed is waiting. Actually, I can understand that the inflation expectation is an issue due to long end of the yield curve. Probably they're waiting to some calm in the calm which will come if this uncertainty arising from this tariff deals goes. But the issue is, my concern is if they, if they come late to cut rates, as they did, not the same, but in I think it was 2021 November that the inflation transitory narrative issue, as if you remember, that they were like, the inflation is not transitory, they accepted, then they changed the policy. I hope that won't happen again for the sake of the risky assets. But yeah, that's the current environment right now. So I'll quickly flip through some charts and try to show you some potential trade ideas like under these economic environment. So let me skip to the chart section. First of all, let me start with this US 30-year, this famous 30-year yield chart. As you can see, the range that I was mentioning is this. As you can see, as long as we don't see any like a breakout from here, that's how I'm tracking this. Because remember, like my mentality is, in general, there are a lot of like data flow, like news flow coming out, and we don't have any control on it, right? And the best way to control our trades is just to act according to price action. That's why I try to spot a chart in any kind of instrument. If there's let's say the current issue is long-term debt. So that's why I'm going to 30-year yield charts, and I'm tracking those rumors according to the chart. So if this concern on long-term debt is real, then we need to see some breakouts from this level. That's how I trace. But as you can see, these are not levels that we hadn't seen before, but that's how I'm tracking right now. Let me go to quickly the Euro Canadian dollar chart. As you can see in the monthly chart here, a huge ascending triangle chart pattern, a potential breakout from here that comes with some oil price weakness, which I'll come up just a little bit later, I think the next one. If we see due to the excess, the potential excess supply on the oil, I'm more bearish on oil. So if we see some negative pricing, weakening on oil prices, we'll see that Canadian dollar will weaken as well. So in such scenario, the Euro Canadian dollar monthly chart, this ascending triangle might be used as a long opportunity. So let me go to crude oil quickly. As you can see, it's, I think, it's a really nice place to be short. It's testing this previously support and current resistance level. Breakdown and pulled back. We'll see what's going to happen here, but I think it's really nice area to try to be short. And yes, Russell index that I want to mention. So when you go to the weekly chart, as you can see here, you can call this like as an ascending triangle chart pattern, right? But what I would bet on in this chart is this head and shoulder bottom chart pattern, which is like probably breaking out. And if you try to be long around here, put a stop around here, and if you just let it run up until this resistance level, it gives like a 1-to-3 risk reward ratio, which is pretty nice. This was the one. So the second one, oops, my bad, sorry. Second one is Dow Jones futures contract. Same here. You can bet on this head and shoulder bottom chart pattern for a potential breakout. You can also let it run up until this level. I think these two index futures charts give a nice, like a technical, nice opportunity in terms of like a technical perspective. So, and lastly, I would like to mention the silver price action. As you can see, there was a rectangle chart pattern I had shared this trade idea in Rationale newsletter service, which you can become a member from the link below the video. This was sent, I don't know, like maybe a month ago. The rectangle chart pattern is being formed here. A potential bullish activity might be there. So when I see a divergence between gold and silver, I generally, because if you're like, the gold price declined on Friday, but the silver price moved pretty well. So what's the reason of this? Generally, this is because of some catching up activity. Because if you look at this like a recent 3 to 6 months, you'll see that gold outperformed silver, right? So if we see some a potential top price in gold silver ratio, which I'm showing right now in the monthly chart, for example, as you can see, the previous monthly high is here and currently we're here. If it goes around here, we might expect to see some reversal from here, just as a part of a catching up activity of silver. That's, I think, what we're having right now, what's happening right now. And I think this, I'm showing this, sorry. So this rectangle chart pattern is pretty nice technical opportunity to be long in silver. So thank you for your time. That's all I'm going to talk about this week. If you have any question, please just you can write as a comment below. And please, just if you find helpful whatever you see in this video, please just subscribe to our channel, and a thumbs up is important for us. Plus, if you can share with your friends that would be interested in, we would be glad. That means a lot for us if you just want to support what we're doing here. I wish you a really nice week. Bye.